What's going on, YouTube? So, we've been getting lots and lots and lots of questions on what is this gold thing we're doing? What is this? This Ironman and Gurjot, what are they doing with gold? So, as you can see, right, there we go, right there, top right, high probability gold strategy. So this is what we've been doing on the live stream. We did it last week, caught one or two nice trades on gold, and then a lot of people were just crushing it on throughout the week using it. And we still got a lot of questions on, well, what kind of dictates an entry, stuff like that. So, Clay, Gurjot, you want to say hello and we'll get into this damn thing.
What up, everybody? It's
How's it going?
Gurjot.
It's Clay. What's going on?
Let's do it. All right, let me switch the screen and we'll get rolling. So, Clay, you want to kind of walk us through? I mean, it's your strategy, so like you want to kind of walk us through, start at the basics, and then we'll work through stuff. I'll throw some questions at you in terms of what qualifies and stuff like that.
Yeah, and let me just do the arrow. I guess the arrow is used. So the strategy is always that I'm trading. You can trade it trend or counter trend, but I really like to trade it trend. And since all the higher time frames are uptrends, I'm looking for a tail in this instance, which will be right there, right there. I'm looking for a tail that's longer than the body of the candle, which that one is. And then I'm going to enter the trade at the close of that hour candle. This is an hour, hour candle. And I'm going to enter the trade here at the close of that hour candle.
And then stop loss under the
what was that?
Stop loss under the wick then?
Stop loss would be under the wick, and it would be, again, depending on how you label it, I say it's $2 or $3 or it's 20 or 30 points below. Because what you don't want to happen is you don't want it to come back to it right here, right? Let's see if I can do this right. You don't want it to come back to here and then go up from there. So you always place it below the tail, and you probably place it $2 or $3 below the tail. So you give it room to kind of come down and retest the area and then break back up, because we know that the higher time frames are an uptrend. So if you would have taken this one here, and I'm trying to figure out, I'm drawing here how to draw a line just right there where I have my clay hall there, where I would have entered right there.
Yep.
There we go. So I would have entered, and what price is that? The price is $18.90.
90.40.
Okay. So, and then once I get up $3 to $5 for 30 to 50 points, I always place my stop at break even. So this candle gave us that $3 to $5, right? Because this candle comes up to 18.98 or so. Again, I'm not.
Yep, 97.
Okay.
90. Yeah,
so
97ish.
Once you're up at 98, you place your stop at break even. So your stop is no longer $2 or $3 below the wick. It's at break even. So if you did that to break even, you never would have gotten stopped out on that trade, right? All the way up to here at 19.12.
Yep.
Okay, so then what I do, once I get up probably $3 to $5 is break even. Once I get up where it was in 18.98 or maybe 19.02 in this area, I'm going to move my stop again to plus 20 or 30 points, right? So I'm never getting out of the trade. I'm always just moving my stops higher.
So like go ahead, my bad.
Go ahead.
So like as the price is like going in your direction and it just continues to go in your direction, you're not taking your position out. You're just kind of, so like it went up another 40. All right, let's lock in another 20. It goes up another 40. All right, let's lock in another 20. You're just kind of trailing it on the way up. And if it takes you out, no big deal. You made money. You can always re-enter kind of thing.
Right. And so let me clear this, because we kind of went over that one there. Then you see this one here. After you've gotten into that trade, right? There's this one here. Yep, that candle is definitely longer than the body.
Center it. Go.
Well, but it's this candle right here, right? That candle there, that then it goes up again. You do well on that one. This candle's longer than the body. This candle's longer than the body. So you had multiple opportunities if you didn't catch the one at 18.90, right? Yep. It comes up here. I wish there was can I do something where I can just draw and do lines?
Yeah, there's an arrow. So like go over the thing that you're clicking on. It should pop out like this. You should get this thing. Go to draw, and then you can click on the arrow, and you can get all weird with it.
Okay, I think that's. Oh, I got you. Okay. Is that what this is here, or is that what I was doing before? So you had these well, that's what I was doing before. That's okay though. So you had these 3 opportunities here at different levels. And if you want, Paul, if you can just draw lines on those, maybe. So you had opportunities at 1892, but the candle didn't close till where? That candle didn't close till 1894. So there's your entry at 1894. And then the next one doesn't close until 1896. But you had multiple opportunities that went to 1912. So you shouldn't. So at that point, if I'm up at 1890, that's $22, or would it be 220 points?
Yeah,
So
about
if
that.
if I'm plus 22, then my stop is going to be probably broken in half, which would be plus 11. So my stop would have been probably at 1901. After I get way up here, I've had multiple opportunities here, and it gets way up to here, because after you see these candles that you got these 3 extra entries in, this is a momentum candle, right? Right there.
Oh yeah.
There's no signal of any kind of rejection. There's a signal here, but I'm already in the trade and I'm just placing my stops at break even or stop. So I don't get stopped out there yet. And then once I get up to, because I'm not placing my stop at plus 11 when I'm only up 10 points, but way up here, I'm starting to. And then you start to get the rejection here, right? On that one.
Yep.
And then you get stopped out, right? It comes all the way down here. You don't really see any kind of signal to the upside again, because we're looking for buys until that right there, right?
Yep.
There's your next entry right there.
What about this one right here? With this?
No, let me see it. Your kind of thumb is on. No, it wouldn't be for me. That's an indecision candle. I want it to have a wick or a tail that's longer than the body and not have anything on the other side if possible.
So when does the close of the body, is it better when it's in your direction? So like when we get this one, right? Is this one okay because this wick is so
It doesn't matter. I don't care if it's red or blue.
okay? Just wick
Yeah.
longer than the body.
Yep, and the reason I say this, because remember the thing is the 4 hour, not the 4 hour, but the daily, the weekly, and the monthly are all uptrends.
Yes.
I don't care what color the candle is. I care that tail is longer than the body.
Gotcha. So then this would have been one entry. You could have
Yep.
got up to here, got break
Right
even,
here,
or put your
right?
stop.
There's your entry right there, and your stops would have definitely been able to be at least break even, right? Because you got in where at 1894, so you had $6 in profit. You might put it at +2, but it should not be a losing trade, right?
Yep. This one actually caught me out as a losing trade as well.
Right. I think you said the consolidation kind of killed you a little bit.
Nope, that was over here. This one I
Okay,
closed at
gotcha. Yep.
minus $5, but this one I was also in from Asian right here. And then this went up right here, and then I woke up for this candle, and I was like, "Oh, we're gone."
Yeah.
And I didn't move it to break even. I was just like, "Yeah, it's gone. It's going up to the high. It'll, because my break even was right above here, and I was like, "Yeah, we'll hit break even, and then if it comes back, I'll be out." And then this candle happened, took me out,
Right.
and then re-entry here on this one.
Yep. And then it consolidated for a while. It took a little time, but you never would have, if you would have placed your stops $2 or $3 below that tail, you never would have got stopped
Yep.
out, right?
Yep. Nope. Never did hit me out, but this candle happened. I was like, "Okay, we're looking good." And then this one happened, and I was like,
Yeah, and it happens. You know, I mean, you can't be perfect for sure. And then, so if you got that one, you would have done all right, because it came to here, but then it went the other direction, but it never would have stopped you out. And then here's your next one here, right?
Yep.
Next one here, your entries here, and that one you definitely did really good on.
An entry where on this one?
Entry would have been right here.
On this candle?
We're right there, yeah, right where my arrow's doing, because that's the opening of the next candle. Oh no, excuse me. You're right. Sorry, up here. Let me clear all this again. So it would have been right here, right? At the start of that new candle from this signal right here.
Yes.
Okay. And that would have been at 1900, and you would have been to 1912 again. So your stop should have been at +3 or 4 still, right?
Yep. I'm gonna center this again real quick, and then
Yeah, no worries.
keep running through it, you and Gurjot, real quick.
Okay. And then your next one would have been, I mean, this, again, it's longer than the body, but the body's not, and there's not one there. You could have possibly done one right there, which would have been at 1900 again. Your entry would have been right there, and you would have done just fine there as well, because your stop's always to break even when you're up $3 to $5.
Yeah, I do a slightly like same strategy. The only thing, instead of $3 to $4, I do sometimes 1 to 2.
Yep.
Break even.
But the important thing is, and I always tell the group, is the important thing is protect your profits when you get that $3 to $5. And it doesn't matter if you keep hitting singles. keep hitting singles, right? Because
Yep.
eventually you're going to get a home run. Just keep hitting
Yeah.
those singles with those $2 or $3 take profits, and then eventually you'll get a big one.
Yeah, and
Okay.
then because like you said, like when gold runs, it'll run. Like
Yeah.
it'll rally up nicely.
Okay, so this one is a questionable one right here, this red one here, because you have a tail and a wick on it. And I don't like those because to me that's an indecision candle. So I would not have done that one.
What about this one up here? Did you say you would hit this one?
Yes, and I would have lost. No. There's a wick on the top too, right?
Yep.
No, this one is, if there's a tail and a wick on that one, no, I'm not taking that.
But this one was an entry here, and that would have probably
let's
hit
see.
stop.
Your thumb's on it. No. Well, oh, you're talking about to the sell side.
Yeah, to the sells. Yes.
Okay, yeah, I'm just talking about the buy side to this.
Okay, I got you.
That would have been sell. We can go over the sells too.
Yep.
But I'm just going over the buys to this point, and we can go over the sells as well.
Gotcha. So this is more where's the daily, the weekly, the monthly going, and then you use the hourly to gauge that in terms of just waiting for those buys.
Well, I know according to the daily, weekly, and monthly, it's an uptrend, right?
Yes.
So I don't need to know where it's going. I know it's an uptrend, so I'm just scaling down to a smaller time frame chart. I'm looking for where the sellers are getting rejected. I'm looking for big order taking to the upside, and that's how they leave their signs. That's them leaving their signs. If you want to know how the big boys trade, these kind of candles here are them leaving their signs on what's going to happen.
So this one would have been an entry here on the close.
It would have been an entry, and it's one that I think I am in right now, and the entry would have been right here, and you're not stopped out yet, but you're getting close.
Yeah.
So it's I've always said it's probably about 85% accurate. It's not going to work every time, but over the long period, and if you did it just on this chart from the left of the chart to the right of the chart, it may not be 85% every time, but over the long run, it's going to be. Gotcha. And then if you want to, and then you guys can ask questions. Let me just do this real quick and see if I can spot. Now we can go to the other side, right? Here's a sell candle right here, because that wick, if it's at the top of the body of the candle, I call it a wick. Okay, here's your entry right there, right at the opening of that next candle. Mm-hmm. Would you have made enough money to place your stop at break even?
Oh yeah.
Yeah.
Absolutely, right?
So I actually saw this. I actually saw this move happening, and I didn't take it because like I measured it, right? It was 52 to 37. So does that still constitute it, or does it have to more so be like just a really weak close with a long wick, or is it as long as the wick is longer than the body, even if it's like a pip or two, that still counts?
I don't care.
That still counts?
As long as it's longer.
Okay.
And that one was definitely longer, right? That wick was definitely longer.
Yeah, by like 15 pips or so, yes.
Yeah. Okay, so then you come down and you would have, you would place your stops at break even when you were up. This one right here might be close, right?
Yep.
But maybe not, and you don't take that, and that's fine. This one right here would be close, right? And I don't know, but maybe you lose there, and that's fine. Every now and again you're going to lose, but that one might be close.
Yeah, it's 37 and 30.
So it's not quite longer.
No.
So you might not take that one. Yeah. And but this one, but even if you take that one and you place a stop loss, you're not going to lose a lot, right?
Yeah, no.
You're going to lose every now and again.
Yep.
So then your next definite one is right here, right?
Yep. And then this might have
and then your entry is right here.
Yep.
And then you do really well down to there, and your next opportunity is this next one right here, and your entry is here, and you do really well there. Your next one is here on the sell side. Your entry is here, and you're doing pretty well right now there. So if you calculated all those different opportunities, even to the buy side or the sell side, I guarantee you, and we should do it, we should count on, but I guarantee you're at least 85% accurate. And when I mean 85% accurate, you're at least, you either break even or you make money, right?
Yeah. Mm-hmm.
So that's kind of the strategy. That's how it works. And you can do it on the 4 hour, you can do it on the daily, the weekly, the monthly. You can do it on any of the currencies, but we're doing it on gold, and it works like a charm.
Does it work? So then if someone was doing it on, let's say, the 15 or the 30, the smaller the time frame, it just kind of lowers the winning probability, correct?
Not necessarily lowers the winning probability, but your expectations. Like if you're setting stops at break even on an hourly chart at 40 to 50 points or $4 to $5, then on a 15-minute chart, that expectation better be $2 you're setting it at break even, right? Because
Your
you're not
target's
expecting
decreased.
you're not expecting as big a moves.
Yes. So your
So
target
you
would
just
kind
have
of be
you,
smaller.
yeah, you just have to tighten up your stop losses, and you just have to tighten up your expectations if you're trading it on a lower time frame.
Gotcha.
I also think on the lower time frames, the opportunities happen more often. So it's just kind of like, it's like if the opportunities happen more often, there's gonna be more chances to fill, but the probability is the same. It's just like there's a more number of chances to get in a trade.
Yeah. And it might
compared
be
to the
slightly less than 85%, but over the long haul, it will be close to 80 to 85%, even no matter what time frame you're doing it on.
So like this one here would have been an entry, correct?
Yep.
That'd have been a win. This one would have been an entry. That'd have been, you could have at least secured and gone break even and then got hit out. And then this one would have been another entry.
Yep.
Okay. So if you're doing it, would you say if you're going to be selling, you're going to want to be selling higher on the smaller time frames and buying lower as well?
Well, yeah, and if you're doing it, remember, if you're trading it to the downside, you are trading against a major higher time frame uptrend.
Yes.
So you're counter trend trading. So again, that all that tells me is I better secure profits or put my stop loss at break even as quickly as possible, because I know that overall the uptrend is probably going to win out over the long run.
Yeah.
Gotcha.
But I'm just looking at these examples here, and I guarantee I'm not even looking at the numbers, but I guarantee it's 85 here on the 30-minute. Even if you take the sells and the buys, all of them,
Yep.
I guarantee
Sells
you're
here,
winning more than you're losing.
buys here worked.
And also think going with structure helps more. So it's like pretend like the structure is kind of sitting up for a higher low here, right? Correct. And if someone does take entry on this, obviously this is not the best entry and the best confirmation. Like going with structure is a lot stronger than going against structure.
Right, but well,
It's very
and
it would have been
there's always different terminology. You say structure, support, and resistance, whatever you call it, right? I mean, it's to me is so. But what's really interesting here too is look at this here. This was a significant level here, right?
yeah.
You see it break above that, and then
Yeah.
you get the rejection here.
Yeah.
Okay, a lot of the times people trade breakouts, right? I can name you many people that trade that breakout right there, and they get hosed. Okay.
Yeah.
This is exactly what, and I know you guys. I don't think Gurjot believes in. I don't. Well, Paul's opinion. This is exactly what the big boys want you doing. They want you buying the break of that.
Okay.
They want that. They're setting you up. It's a sucker play, and then you get the signal right there. And what does it do? Comes down here, breaks below, and then gives you this signal right here, right? Well, what do most retail traders do again? Okay, now it's broken below. I better go this way.
Like a fake out.
All it did was it was a breakout retest into a significant support area right here, and then it moved up again.
Yes.
So they got them on both sides, right? They got them doing the buys of the break, and then they got them selling the break of the bottom.
Yeah. And
so,
then they continue. And then they continue.
And then they continue in the overall higher time frame direction, correct?
Yeah.
So and I mean, this one, like you were saying, was a perfect one. This is a perfect one. That's a great one right there.
I think it's gonna be real good for Asian session too. It's gonna really give us just better. It's gonna give us more of an opportunity to do something in Asian session.
Which one's Asian session for the colors?
So if
this
you
one
did this, Paul, like you were doing, let's just. I don't see any over here to the sell side. So well, this one would have been right here. This would have been your first sell side one right here, right?
This one. Over here.
Yeah, and you would have done okay there. I think you would have made enough to break even at least.
This one, yeah.
Close.
Close.
But let's call it a loss. Let's call it a loss because it's about being transparent for people.
Yeah.
Call it a loss. This one's a win. Pretty close. That one would be a loss. That one would be a loss right there. This one I wouldn't take just because there's too much on both sides. To me, that's indecision. Okay, and then I come down here. I don't see any. There's one. There's one. So there it is. So you have how many examples there? 1, 2, 3, 4, 5, 6, 7, 8, and you had 2 losses. It looks like. Did we say 2?
I think we'll say 1, 2,
and then that
3.
one right there, 2, 3.
Yep.
So 5 out of 8 on that, which is counter trend, right? Remember, that's counter trend. Yep. Okay, so now you go into this one, the upside, you have these candles here, which will count as one. There's 3 consecutive, which is actually nice.
Let's clear it real quick.
Okay, yeah, that's clear. That's
There we go.
clear.
All right, let's hit the buys now.
Can we clear? Okay, so I'm going to count that as 1. I'm going to count this as 1. And I'm just doing them as I see them. You guys tell me if I'm wrong.
Yep, this on the hourly was really perfect too.
Yeah, so, and I don't ever trade the 30 minutes, so this is new for me.
Yep, hourly worked out here.
That one. That one. These ones right here, right?
Yeah, this one here might have lost. Or you could have at least gotten
Yeah,
break
they
even.
probably did. Yep, you're right.
Well, let's measure.
So
Hold on.
that's okay. This one right here.
I mean, 14 pips and you got up 20. You might have got even. Plus you're coming into a resistance, so yeah, maybe.
Tell me if you see any more. I don't see any more.
Right here. This one was winner.
Yep, there's one right there.
This one might have been a loser right here.
Well, if your stop's not below, your stop would have been below there, and it would have went up. You would have been okay on that one.
Yeah, and one thing I want to mention about the stops is like when it's near like some sort of support, like down here, right? It's like someone took this buy here. The stops wouldn't have been under the wick, and it would have been under like the support created down here. Like how you also give it a little room, right? Because and if the stops are under there, you would have been clear even on these wicks.
And Gurjot makes a really good point here, because if you're here, right, this right here, you see this area here. You got to place. You got to look left still. You got to place your stop loss below that area.
Yes.
So if it's more than $2 or $3, place it below there.
Yeah,
you know, be smart about it.
Mm-hmm.
Yeah, I agree completely with you there.
Yeah, how many examples do we have here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10.
Yep.
How many losses do we have? I think there's 3, probably 3 or 4, maybe.
There are winners. Winner. We'll say this one was break even because you still hit 2 to 1 on this, so you definitely should have been break even. This was a winner. This one was probably a loser, so 1.
Yep.
I'm gonna say this one. This would have definitely hit my stop loss because my stop would have been probably right near here. So we'll say 2. So 2 for 10.
So 8 out of 10.
So 80%.
So and then we were 6 for 8 on the downside.
Mm-hmm.
So that's 18 examples, and we were 14 out of 20.
Yeah.
Because we were 8 and 6.
Yeah.
Okay, so what's 14 divided by 20? 70%.
Around there, yeah, roughly.
Okay, so 70%.
And that's on the 30-minute too.
Yeah,
so.
70% on the dot.
Yeah, so that's on the 30-minute.
And so the key thing is that, and we talked about this a little bit in the stream last week, and you guys can answer this, and then this is something that people really need to think about. Life or anything is about routines, right? We get comfortable in our routines. And if I have something in a pattern in my life that's 70% accurate, again, the question you have to ask yourself, why is there any emotions in trading?
There shouldn't be. If you're doing the same thing every day, consistently, you should consistently get the same result. I
mean, if you're doing 2 to 1 risk reward, right, you only have to be right 4 out of 10 times.
Yep.
And we're right on this, we're right 7 out of 10 times going either direction.
Yep.
That's pretty good. There should be no, and so I'll tell the group, it's all the time. They're like, well, what do you think? The pattern's there. I'm like, well, what do the numbers tell you? The numbers tell me to buy it. Well, then do it. Why are you even asking?
Yep. Don't hesitate.
The numbers tell you to do it, and it's 85% accurate. The question is not, should I do it or not? The question is, do I trust the pattern? And the answer is you should, because we've done it day after day after day and made massive amounts of money on it.
Yes.
So this way, it takes the emotion out of it, for me at least. Now, I trade it a little bit differently, as you guys know, because I don't use stop losses a lot, because I know those higher time frames are an uptrend. I'll just buy more when I see the signal again. But I trade differently, so I don't want anyone necessarily saying, oh, I should do that too. Trade it with the stop loss. Just make sure that stop loss is, 2 or 3 points below or above the tail or wick.
Yep. And I would also say, if you're trading the candle near an open, like a session open, like NY open or NYSE open or London open, maybe wait for that hourly, because we see right here, this hourly, 7 o'clock, NY volume came in, would have stopped us out a little bit here, and then it just continued. So if you waited for this candle, jump on, let's say you wait for the first 30 minutes. The first 30 minutes, all right, boom, now you're safe. You can get that entry. you know where the high of the volumes came in, and now with
Yeah.
this setup here, you should be good. So the being aware of those session opens is also really important as well, because otherwise, if you got in here or here, you know there's volume coming in that are going to be stronger than these candles. Just let that happen, and then jump in.
All right. So those candles right there that I just highlighted.
Yep.
If you think about, and again, I've told you guys before, I learned from a guy that learned from the bank traders. If you think about what signs or crumbs, because he always used to talk to me about they leave signs in the market. You have to learn how to read the candles because they're giving you hints. Okay. And if you learn how to read those hints, and these are the people that actually move the markets, right? These are people that when they place their positions, they move it. And they're leaving hints, they're leaving signs, and you need to learn how to read them. This tells me right here again, what? That buyers tried to push, and there was obviously a big enough order up in this area that pushed it down, right?
Yep.
There was obviously enough of an order here to push this down. And the amount of money it takes to do that is astounding.
Incredible. Yeah.
We don't even fathom the amount of money it takes to move that.
Yep.
So there was obviously, people call them order blocks, you can call them whatever they want, but this is a sign that buyers are getting rejected, right? They pushed, and then buyers got rejected. This is another, these signs are all over the place if you learn how to read candlesticks properly. Here's another perfect example, right? Here's another perfect example. I mean, they're leaving signs all over. I tell people all the time, every candlestick tells a story. And you have to learn how to read what that candlestick is telling you.
Yep. So with this one you marked here, I want to jump into it real quick.
Yeah.
So let's say you did take a sell on these ones here, and then you get this candle. Let me clear the screen quick. So this candle, I remember you and I talked about this, but I think the YouTube, this will also be really good, is how to manage your position. So we have these two rejecting the top, right? So ideally we'd be jumping in sells on the close, and then we get this candle closing with the wick longer to the bottom than the top.
Yeah. So tell me right here, this would be our entry, right? Where our entry would be right here.
We'll say right about here. Yep.
And then there's where you're getting a rejection. Trying to reject. So where's the difference between those two? I wish I
like that. Is that what you want to see?
No, well, between these two green arrows, what's the price difference? 1906 to 1904. So you're $2. You're $2 profit.
About $1.
Okay, so at this point, I say to myself, it's an uptrend, right? In the higher time frames, I already know that. Now I'm getting the signal to buy it, which would be with the trend, right?
Mm-hmm.
And I'm also going to look at this and say I've got momentum to the upside because that wick tail closes higher. This tail's closing higher. So I either am going to exit that trade, or I'm going to place my stop at break even, which would only be $1. But if I'm in a sell, because I got into that sell, I will not reverse it to get into a buy.
You'll manage it a little bit tighter, maybe.
I'll manage it and I'll place my stop at break even, but I'm in a winning trade at that point, right? Yep. I'm not necessarily in a huge winning trade, but why am I going to reverse a winning trade for a potentially winning trade?
Makes sense.
I'm never going to do it. I tell people all the time, Jesus himself could come down in a cloud, a beautiful cloud and a beautiful white robe and tell me to do it, and I wouldn't. And I'm a religious person, I believe. But that's what I mean. And I say all the time too, 5 Victoria's Secret bottles could show up at my door and say, well, come in if you'll just reverse the trade. I won't. But I'll place my stop at break even, right?
Yeah, 100%.
But if I'm not in that sell because I'm only looking for buys, I would definitely buy it. But I'm not going to get into a sell if I'm a buy if I'm in a sell. But if I'm not, I would buy that for sure.
Gotcha.
And look at the other thing that it does. The interesting thing that it does here too is if you look to the left, it's closing pretty close to this area, to this key level right here, right?
Yep.
So if you can align those candlesticks, those tails at the bottom with previous support, that's even better.
Then we got support, and we moved up to the highs.
Yeah.
Yep. Exactly. Well, I am out of questions. But you got anything else, or did we? I feel like we hit everything pretty spot on.
Gurjot, do you have any questions, my friend?
Gurjot, what do you got?
No, one thing I just want to mention was like a lot of people always focus on like, oh, I lost this trade. We're using this strategy. I lost this trade. losing trades are gonna happen, but key thing to remember is we're not only going for 1-to-1 here. So it's like pretend you do have those two losing trades and you have like even two losing trades and you have one winning trade, it'll cancel out right away because we're going more than 1-to-1 here. We're going for 1-to-2, 3, 1-to-4.
And just remember too, like we on the US 30 this last week, my group, we won every single one of them except for the very last one on Friday when I was traveling. I remember someone writing a message, "Are we ever going to lose on the US 30?" I'm like, "Yeah." And we lost the last one. That's good for you.
Yeah.
It's good to lose. Like after a while, you're like, we got to lose. And so you're going to lose. But the problem that people have is once they lose, they're afraid to get back on the horse. And that's why I have to coax them. I'm like, the pattern works. Trust the pattern. Trust the process.
Yeah.
You're
People
gonna
forget
have
that
losses.
it's probabilities. It's not like nothing's 100%. Like you can have a good run. You can go a couple weeks, maybe a month or two without a loss.
Mhm.
Like that can happen. But you're gonna lose, and that doesn't mean your strategy is not. If you won for 2 months straight and then you take a loss, is your strategy a losing strategy? No.
No,
You won for
no.
2 months. Like that's an incredible. Even if you win for like 3 days straight and then you lose, like that's still good. People just need
Right.
to
Right.
Yeah.
My Air
probabilities.
Force commander always used to say, and I think I've told you this guy before, you guys this before. My Air Force commander always used to say, "All I want is an unfair advantage."
Any side, any sort of edge.
Yeah, so think about that. And if you're the US military, you always have an unfair advantage, right? I mean, that's just the truth. But so all we're trading is probabilities, right? No one knows what the markets are going to do, but there's things that we can do in order to get that unfair advantage or that edge. And this is what learning how to read candlesticks the right way, understanding how the markets work. And we've talked about this before, and I know Gurjot and Paul and I've laughed about this before. The original reason why I went into streams, not Paul's per se, the original reason I went into streams was to see what the sentiment of other traders were. And the reason I did that was because I want to know what they're doing. Because most of them lose, and it's sad to say it, and it's mean, but I want to know what they're doing so I can say, what are they doing, and how can I take advantage of probably the mistakes they're going to make? Because let's be honest, they're going to make mistakes.
Mm-hmm. Yeah.
So how can I take that information that I'm getting from them and the sentiment, and then use that to, because the
Your advantage.
sentiment here, let's just do this example right here again. The sentiment here, when it breaks, what are most retail traders thinking? Uh-oh, it's going up. I better buy. It's going up. It's an up, up, up. And so once that sentiment is overwhelmingly buy, you come in and you see this, and you're like, yep, there it is. They're getting suckered into it again, right? And there's your entry, and you do pretty well.
Yep.
So you always have. I tell people to think differently, and we're like hunters, right? I mean, we're laying on our perch and we're waiting for the markets to come to us. Don't chase the market. Wait for the market to come to you, and then be ready to pounce when the market comes to you. We're hunters. And they're leaving us crumbs. They're leaving us breadcrumbs. All of these candles are telling you a specific story. And if you don't know how to read these candles, or you don't understand what the candles are trying to tell you, you're going to be part of that 80%. And so we want to think differently.
Yeah. And one thing I would mention is also with this strategy, one important thing I think all you guys can agree is understanding how to manage it. It's not just trying to go, okay, break even quickly as possible, but it's like sometimes you got to give it a little bit of space. Sometimes you got to go break even because you see something going against you. It's like understanding when to and how to manage the trade while being in it.
That's true. And so when we were in Miami, I had I think 3 people with me in Miami this last week from my group, and the main thing I wanted to show them is when I would place my trade. Do you know what I would do with my computer?
Close the damn chart.
Close the charts. And they're like, what? And I'm like, we're in Miami, like we're at South Beach. I'm closing my chart. I'm going to give it time to, if I sit there and look at it. So the main thing I was trying to help them understand is trust the analysis, trust the process, shut down the charts, and let's come back in an hour because we're trading off the 1 hour chart, right?
Yeah.
We're not going to know anything for an hour.
Yeah, that's what Gurjot was saying too, is just set it up. You're on the hourly, check back 30 minutes to an hour.
Yeah. And so those 3 guys that went down there, one of them said, I've been having trouble getting past a certain level in my account. And now I'm way past this after this week because I was teaching them how to just hold on, just be patient,
Yep.
The markets aren't, a lot of the times it's not going to make killer moves in an hour or 2 hours. It's going to take time. And Paul, I think that's what we talked about when when you got knocked out of that one. It was just, it took so long that you're just like, this is taking so long?
Yeah, right here it
And
was.
that's a tactic that they'll use a lot. Jared used to tell me that's a tactic they'll use a lot too. They'll just let it sit there, and people will get really frustrated, and they'll get out of the trade.
Yep, yeah, I got in on this candle here, and I got
Right.
in right at the top. I was gonna wait for a wick, but I was like, no. I did that one time, and it just went without me.
Yep.
So I was like, at the close, I get in. That's it. And then all this happened, and then this one happened, and I was like, okay, we're good. And then this one broke above here, and I was like, okay, we're gone. We're gonna get up and close above here. And then we closed like this, and I was like, I'm just gonna get out and profit. It's been 1, 2, 3, 4, going into 5 hours.
Yep.
It's Thursday, like that. I just want to not lose now.
And you're not thinking wrong. That's
But
not
look,
wrong, right?
I was gonna
Just
say, look
manage
where
it.
it went.
I might have done the same thing. I mean, so you didn't do wrong there at all.
No, not at all. Just managed it.
Yeah.
Because for me, it was like, okay, we'll give it 1 or 2 hours. But if at that point it still hasn't at least gone up into profit, then the chances are probably a little bit lower than when I entered the trade.
Mm-hmm. Yeah.
One thing I want to mention is this exact same trade that you took. Someone messaged me on Instagram, and they took, I'm not sure what candle they took on, but it was in this general area, and they had their stops at a really safe area. If you scroll left a little bit,
Right
so
under
see
here.
how this, yeah, they had it under the lowest wick to the left. So yes, this is support. Yeah, you could have put it even here, and it would have been safe, but they decided to put it under the lowest lowest kind of area to the left, most recent, and their stops were completely safe, and then they rode it all the way out to the top. I believe, I don't know exactly where they came about. Even if they rode it out here, it would have been
Been a
a
nice
beautiful
one.
trade.
So and then for where I'm going with all of this, for at least for me, is I'm going back to the 4-hour chart. So I'm going to trade it off the 4-hour chart, and if I don't see the pattern on the 4-hour chart, I'm just going to go away for 4 hours.
Yeah.
Like,
Because I
kinda
want
happened right up here.
I want to get some of my life back. I want to be able to go do things and enjoy life. And so if I don't get the pattern, but I can do it on multiple currencies, not just gold. But if I'm just trading gold and I don't see it on the 4-hour, I come back after 4 hours.
Look at that. I quickly just pointed out three sort of trades someone could have taken, and each trade.
Yeah, you can point to that one.
It would have been all 3 winners right there.
You can point to this. Yeah, you pointed to that one.
Yeah.
I mean, it's the 4-hour probably is actually more accurate than the 1 hour, to be honest.
Oh yeah, 4 hours really good.
Yeah, and all 4 of those would have been winners right there.
And all 4 of those would have taken care of any losses you had and more.
Yeah. You got to hold through. It's like 4 hours, like holding it for like a day or 2 days. It's a hard thing to do for some traders, but it's like if you do it, each one of those would have been winners.
But look at this too. If we go back to this one here, this would have been your entry right here, right?
Which one?
This one right here.
Oh yeah.
Okay, now you look at this next candle. Is there any sign of rejection in this next candle?
Nope.
No. Okay, so that's 4 hours. Next 4 hours, is there really any sign of rejection there?
Nope.
Nope. Is there sign of any? I mean, a little bit right here, but there's not a tail, right? We're looking for a tail that's like this, right? You don't see that there, and then you start getting the pattern again to the buy side again.
Yeah.
And then it goes up then it goes up here. Here's where you start seeing your first signs of rejection up here, right?
Yeah.
I mean, it's not longer than the body, but you're starting to get some rejection there.
And you can manage
so
your trades.
When you say, okay, I'm going to tighten up my stops, and then that's when your down move happens, right?
Yeah. You would have been in profit. Your stops would have been in profit there already.
Yep. You would have been fine. But that first sign of rejection is right here.
Yeah.
And that's what you look for. Then you start tightening your stops, but at that point, your entry is right here at 1898 or so, and your first sign of rejection is at 1924. I mean, come on.
Yeah.
If you can't make that a winning trade, then you need to stop trading right now. So
I think we nailed it.
Yeah, I think people needed this video.
If anyone has any further questions on everything we went over, feel free to hit myself, Gurjot, or Clay up on Instagram as well. Get lots of help, and if you just got extra questions, we can hopefully sort that out.
Yeah, and just put our Instagrams on there when you put the video. Post those Instagrams on there, all 3 of us, so they can get a hold of us, any of us.
Yep, I will try to add that in. I'll put it in the description. I'll put the Instagram in the description.
No worries.
Yeah, hopefully you guys like this video. Be sure to like, subscribe, follow everyone in the description. Check out Gurjot, check out Clay, and we'll be here.
Just real quick, congratulations, Paul, on you're close to 10,000, right?
Yeah, we are gonna break 10,000 this week. We are about 300 away.
So
So
congratulations on your hard work, man.
thank you,
That's
Yeah.
awesome. I'm
thank
proud
you,
of you, man.
thank you, thank
Let's
you.
let's hit this 10,000
Next step's
this week.
20K, boy. So, but yeah, be sure to like, subscribe, and come check out the live stream. We do all this stuff live. We've been breaking down gold in the Asian session pretty well. So yeah, live streams 5:30 p.m. CST. And you guys have a good Sunday, and I will see you all in the next video on Wednesday.
Peace.
Goodbye, everybody.